Recording is taking a second. Oh, boom. There we go. All right. So this is Trading View for my newer people. This is the preferred platform that we like to trade on. It has its learning curves, but it's extremely helpful. If it's a little too complex for you, you can go to stockcharts.com. It is free. That's where I started. I've made some of my largest trades there, but I think that I'm extremely say extremely, but I think I'm just more consistent on TradingView because of all the tools and things that they provide. All right. So before we get started, the thing that I want to look at is the economic calendar. So what events? Last week we had a lot of events. The week before that, we had even more. We had the election, and then we had Jerome Powell from the Feds speak. And for those that don't know Jerome Powell, I'm pretty sure you should. If you're in the trading world, you should know who he is by now. He can send the market up or down, and we saw that last week when he said that we could see a possible pause in rate cuts. That we saw the market tank. I think that it's probably going to keep bleeding from what I'm seeing, but again, that's just the power that Jerome Powell has. So it's always good before the market opens up. Before the market opens, yep, Jay Powell is the man behind the curtain. Yeah, Ross, you're right. Yep, he controls pretty much everything. All right, let's check the economic calendar to make sure he's not speaking again this week. That's 2 weeks in a row for him. He should be taking a break. All right, so Monday, we don't have any scheduled reports. And again, I have my high importance indicator on. This is only showing us the high importance events, so you'll know what's coming up. And again, if you're new, you may not understand why this helps, but news drives the market. The worst thing that can happen, especially if you're like day trading or option trading, is you hop in the market and you're wrong about the direction that it's going in because you didn't pay attention to the economic calendar and find out who's speaking when and what reports are coming out. So Monday, we don't have anything major. Tuesday, we have building permits preliminary, which I don't think that's major either, but it could have something to do with the real estate market. So for stocks like Simon Property, who owns malls and things of that nature, or Leonard, who build homes, they could be impacted by this, but I don't think that this will cause a market-wide panic. So this report and the number that it prints shouldn't really matter. All right, Wednesday, no reports. Thursday, no reports. Friday, no reports. Okay, so we don't have any major reports this week. Thank God. Last week, it was crazy, and the week before that, it was even crazier. So if I turn this off, you can see that we do have a few things here, but they're not targeted as high importance. So we do have a Fed speech on Monday, but it's nothing big. Tuesday, nothing. Wednesday, yep, nothing. Thursday, we do have jobless claims coming out. So again, for people who are trading options or day trading, Thursday morning at 8:30, we have a report that's talking about jobless claims, and this could either push the market up or bring the market down. So just watch out for that. Nothing major, but at the beginning, I've noticed that once this report comes out, the beginning of the market is kind of swayed depending on the print from this report. So just watch out Thursday for my day traders and option traders. And then Friday, we have nothing major. So yeah, clean week. We should be good to go as far as trades. And so we can play the trends. All right, so let's look at some charts. My favorite stock would be the SPY, S&P 500. Let me clean this chart up. Anytime you see a whole bunch of lines and things on my chart, that means that I've been trading it a lot. So I'm going to start with a bear chart or semi-bear chart. And then we're just going to break down the indicators really quick. And then there's always, for people who've seen me break these indicators down before, we can take this ATR off. Take that off. All right, who've seen me break these down before, you know, I'm always studying these indicators and I'm always finding new ways to help my trading strategy by understanding different things that's going on with them. All right, first thing, RSI at the top. The RSI is pretty much telling you if a stock is overbought or underbought. Why is this important? You need to know if a stock is overbought or underbought for entry purposes, right? So let's say if you're looking at buying the S&P 500, the S&P 500 right now is $585.75. but you don't know if that's a good price, right? You don't know if that's a good entry price for a trade. So the RSI, this is why I have it at the top of my chart. It is the first thing that I look at. If my RSI is good, I continue on down the rest of the chart. If my RSI is out of whack, I go ahead and find another stock. And the way that the RSI works, again, you have overbought, meaning that people are buying the stock up too much. And then you have oversold, meaning that people are selling it too much. So if the stock is overbought, meaning people are buying a lot of it, it's going to be up around this 70 line. So around the top side of this purple. If it is underbought, it's going to be bottom side around 30, right? And the reading that you want to pay attention to is this purple. The yellow you can ignore because it's just an average, and we don't use the average on the RSI. I know some strategies that may, but I don't use it. I don't use it for my RSI readings. I just use this purple number. Now, how do you read this purple number? Again, what I'm looking for is a warm spot, right? So if 70 is hot, right? 30 is cold. That means this dotted line, you can see this dotted line going through the middle of the chart. That's 50 is warm. So when I'm entering my trades, I like 45 to 55 in this purple number. And I also like the line going up. So if it's 45 to 55 and the line is going down, I'm not setting it up for a swing trade. I'm not entering that trade to take it up for profit, right? So right now the RSI is at 52.43 and it is pointing down. So if I'm looking to swing trade this stock, this is not a point that I would buy it at based on my strategy. Again, I like 45 to 55 pointing up. Last, a week or two ago, it was at 45 to 55 in this area. And you can see if you would have jumped in the stock here, you could have taken it all the way up to 70. Once it got around 70, you could have taken profit, and then you see that it cooled back down. So that's how I like to use the RSI. Any questions? Let me check the chat here. You use fibs on the market. Good question, Ross. No, I don't. I like to use the VRVP to tell me where the volume is at. And then I pair that with just my standard support and resistance. That could be something that I add to my strategy, but I haven't found a space for it in the way that I trade now. I don't want to have too many indicators. That's another thing for my newer people. If you're trading and you're new, you don't want to have 15 indicators, because if you have 15 indicators, you don't really know what you're doing. It's too much information. I think a max of 5 indicators, depending on what you're going to be using a chart for. So my charts, I can use them for swing trading shares and options, and also use some of the same indicators for day trading and scalping. So to answer your question, Ross, no, not yet. I'll test them out. If they stick, I'll keep them. Any questions about the RSI? Again, overbought 70, underbought 30. The spot to enter, in my opinion, 45, 55, pointing up. All right, cool. Silence is a thumbs up. Let's keep it moving. All right. Body of the chart. So this is the body of the chart. I like to use Heikin-Ashi candles. You can use the normal candles, and you may wonder what's the difference. Normal candles are just using the open and close price for the stock. So if we zoom in, you can see that this red candle that we had on Friday is just telling you the open and close for the stock. So the way that you read red candles is that since red candles are showing that the price dropped, you read it from the top of the body to the bottom of the body, right? So when the market opened at 9:30 Eastern Standard, the stock was at 589. And at the end of the day, when the market closed, it was at 585. So that's how you read the candles. Same thing goes for green. Green is showing that the stock price has been up. So if you're looking here, reading these candles here, you can see that it started at 570, and at the end of the day, it was at 576. So real easy way to read the candles. Now, these are your normal candles, which this is fine. This is the way I've traded for a while, but I've now started to use these candles, which this is much, much better. Again, way easier to look at. You don't have all the gaps and spots and drops that this has. So you got this versus that, versus this versus that. And so these Heikin-Ashi candles are really good for trends. As a trader, you're going to want to find your trends, right? You want uptrends, downtrends, and that's how you pick the points to play. So with these Heikin candles, they're really good for trends. The easiest way to read these is that if you have some green candles and they have wicks on the top of them, that means that the run is going to continue to extend. Now, when the candle size itself shrinks, it gets small like this, that means that the trend is about to change to the other side. So you can see every time we go from from green to red, you have the candles shrinking, right? So you got this green, strong green uptrend, and then once we're about to go over and come back down, you can see that the candles start to shrink in size before it goes to the other side, and these become larger. So that's why I like these candles. They're just better on the eye, in my opinion. And these are what I like to use to trade for the time being. Any questions? Cool. All right. What we'll do, we can talk about the MA ribbon real quick, and we'll talk about the VR. We'll talk about the VRVP later, because I have a stock that I want to give you all an example and walk through on how to use it. But let's look at the MA ribbon. So the MA ribbon, these 4 lines, is just moving averages. Excuse me, I have hiccups. All right, the moving average is just the average stock price over any given period of time. So these lines are just trend lines for how the stock is trending on different time frames, right? Or different timelines. So if we look at this and we look at the MA ribbon, it's extremely simple. You can see that I have an SMA, which just stands for simple moving averages, nothing special. And then we have 20, 50, 100, and 200. So when you're looking at these lines, and they're all color coded. So when you're looking at these lines, they all are tracking the average price over that period of time. So if you see the yellow line, that's just a 20-day average, right? So this yellow line is the stock price over the last 20 days at any point. 50 days over any point, 100 days over any point, 200 days over any point. Extremely simple. Now, the way that I like to use these moving averages is that as they go up and down, or as the candles go up and down through the moving averages, if you have a stock to where the 20, 50, 100, and 200 are stacked on top of each other, just like this in chronological order from least to greatest, that means that the stock has a high chance of going up. Is going to be in an uptrend. So if I back all the way out, you can see what I mean. 20, 50, 100, and 200, they're pretty much in chronological order, and the stock is going up. You can see where the stock pulled back here. They got out of chronological order for a second, and then they recorrected. Stock is going back up. The moving average went down here, out of chronological order, came back up, and it kept going, right? So these dips, you get a dip every now and again, and these are the dips, honestly, that you could buy, right? So this dip right here could have been bought. You took it back up here and kept running. This dip right here could have been bought. Even that one, that's a small dip, but it looks like we're on a dip right here as well, that could be bought. So another thing about this setup is that you don't have to pay attention to all of these lines. I know it's a lot of lines. I know when you first look at it, it's like, whoa, that's a lot. The only line you really need to pay attention to is that yellow line. Your yellow line is your driving line. As long as that yellow line is on top of all the other moving averages, it's going to act as a bounce point. So you can see back here where we have all the lines. You got 20, 50, 100, and 200 all stacked on top of each other. You can see that we're bouncing along that line. Easy places to take profit, to make trades, so on and so forth. And then once we have a correction, you can wait until it untangles itself and then just play it again. So this is one of the easiest ways to trade. And my philosophy when it comes to trading is take the easy trades. If you look at a chart and you don't know how to read it and you can't figure out which way the stock is going, just move on to another stock. Don't marry that stock. I know some people are like, well, this is my favorite company. It's made me so much money. I have to figure it out. Sometimes you just can't figure it out. It's just too much misinformation. Your indicators are not in agreement and you don't know which way it's going. So it's hard to make money that way. But trading, I had a one-on-one today and was talking to someone about it, but trading is about probability. It's not about guarantees. It's about how probable is this outcome, right? And so that's why we use these indicators. That's why we look at the news. That's why we analyze stocks in this way, is because we're trying to figure out probability. How probable is it to go up versus going down? So if you're looking at the charts again, you can't really read it, can't figure it out. You don't know which way it's going. Find something that's more probable and you should find trades that you can win that way. Any questions about the MA ribbon? Again, really simple. It looks complex. Just focus on the 20 MA, that goal line. And if you want to make it even simpler, instead of using 4 lines, you can uncheck this and you can make it 2. You can just use the 20 and the 50. If you use the 20 and the 50, this is much cleaner. Same rules apply. 20 needs to be above the 50.
So here we have a bullish trajectory, right? So we know that it's breaking to the downside. It's going back to the 20. Mm-hmm. How do we know it's not going to break to the 50?
That's where you check your indicators. The trend is going to continue up as long as these averages are the right way. But like for this one, this indicator right here, my other indicators are telling me that we're probably going to break that 20. We're going to have some hesitation around the 20 because this is a place for support. This is a point to where you see the stock went up and, kind of choked that, and then it popped up and went higher. So when it comes back down, let me zoom in actually. So once it comes back down and it's testing this, due to the indicators, it looks like we could be dropping down here to about 575. This is a tough line. I think that's why we touched it and stopped. Like the candle actually came down and then it was bought back up. It went to 583 on Friday, but it closed at 585. It came up a little bit. So I think this is going to continue the downtrend, but our other indicators are telling us that it's going to break. Does that help, Ty?
Yes. Can I see the other indicators?
Yep. Does that work for you, Ty?
Yes.
Cool. Yep. Good point. So what Ty is saying is pretty much how reliable is this one indicator, right? So another thing you have to remember is no indicator is the golden indicator, meaning you can't just focus on one indicator and make your decision. In this setup, I like to use these indicators to tell me which way it's going, right? So if we look at the RSI is bending down. We look at the actual candles. The candles are coming down. We look at the MACD, which we haven't talked about. We'll talk about in a second. This is curving down as well. We look at the stock RSI. We haven't talked about this one. We'll get to it in a second, but this is curving down as well. So everything looks like it is going down. All of the indicators are in agreement. So it looks like a downtrend is what we're about to go into. And again, when you're reading these candles, once they start to shrink up against a price level and they switch sides, that trend can continue. And it looks like we may be visiting this 575 area.
So with the other indicators, like I can tell that the market is moving downward.
Yep.
What I can't tell is by how much and for how long.
Right. Yeah. So it's about probability. So what I would say is the choke point, worst case scenario is 575, right? So if it bounces, if it drops down to 575, in my opinion, this is where I'm going to start buying the stock. So if I'm looking at buying the S&P 500, it's at 585. It was just at $600. And I need to find a point to buy. This is where I would buy it. Now, could it break lower? Sure. But I'm fine with starting my entry here. I would rather start at 575 to get a lower average than to start up here at 585. Does that help, Ty?
Yes, thank you.
No problem. Good question. Any other questions? Speak or forever hold your peace. All righty, let's keep it moving. All right, next indicator, the MACD. So top left-hand corner tells us what we're looking at. The MACD, what this stands for is moving average convergence divergence. Crazy name for just a simple indicator. So this indicator is telling you what type of pressure is being applied to the stock. So these two lines are representatives of the pressure. So blue line is the buying pressure. Red line is the selling pressure. So as long as the blue line is on top, that means that the buying pressure is dominant. And then once the red line is on top, that means that the selling pressure is dominant. So what does that mean? If the blue line is on top, the pressure to buy the stock is being applied. That means the stock is going to go up. If the red line is on top, the pressure to sell is being applied to the stock. meaning the stock is going to go down. So this is helping you figure out which way the stock is going. So if we're just about to get into a buy trend to where the buying pressure is going to be dominant, this is a good place to enter. All right. You can either enter before if you're a little risky, or if you're more conservative, you can enter after we confirm the buying pressure. Now, what's about to happen is that it looks like we have the buying pressure about to change places with the selling pressure. So the selling pressure is going to keep going up. The buying pressure is going to come down. They're going to change places, meaning if the selling pressure is dominant, the stock is going to want to pull back. So all of our indicators are in agreement. They're telling us that it wants to go down. You can also see that the selling pressure is creeping up, getting pretty close to crossing over. And once they cross, that means that the selling pressure is dominant. We should be in the downtrend. Cool. Questions? All righty. What is this chart for my newer people? This is a histogram. This histogram just makes reading the lines even easier. If you have green, that means that the buying pressure is being applied. If you have red, the selling pressure is being applied. So as you look at this chart, you can see every time that blue is on top of red, you got this green, these little green mountains. So blue is on top of red here, green, blue is on top of red, so on and so forth. So then if you have red on the histogram, that just means that the selling pressure is being applied. So green is buying pressure applied, red selling pressure is applied. And another thing that helps you with reading these the histogram is that once it starts to fade, that means that the trend is getting weaker. So if it's this dark green, that means that the trend is increasing in intensity, right? And you can see the bars are continuously getting higher. But then once you go to this light green, you can see they're starting to fall off. And what happens when the light green starts to fall off? If you look here, you got light green falling off and it goes to red. It goes to strong red, right? Same thing here, light green falling off, strong red. Here, light green falling off, strong red, which means that we could be going into, this is just more confirmation that we could be going into a pullback. So that's the trick with the MACD, is just make sure you understand which type of pressure is being applied to the stock. This is going to help you figure out if I need to take profit. For instance, if I jumped in here and I've made a lot of money on this uptrend, at some point I got to get out the stock, right? And so if I'm up here and I'm like, okay, where do I get out at? And I see this happening, I don't want to get caught in this MACD crossover to where the selling pressure is being applied. Let me go ahead and take profit before this crossover happens, so I don't get caught in this downswing, right? I want to take profit at the top. Once the downswing happens, cool. I want to wait till a situation like this forms again to where the buying pressure is about to take over. And then that's where I can enter at and just take the and ride the buy trend to the upside. Does that make sense? Anyone have any questions? All righty. I'll take a silence as a thumbs up always. All right, let's keep it moving. Last thing, stochastics. This is your momentum indicator. So your momentum indicator is going to tell you which way the momentum is going to sway and how intense it's going to be, right? So this is a stock RSI. It works similar to the normal RSI. It has its ranges, right? We can see this blue, just like the normal RSI has purple, and this one ranges from 20 to 80. But the tricky part about this one is that it frequents 0 and 100. So I'll put a blue line at 100, and I'll put a blue line at 0. Now watch when I scrunch it up how many times it hit these lines. I can scrunch it up and you can see how many times it hit the top at 100 and it hit the bottom at 0. So what that means for us, if we're trading, is that at some point after it hits 100, it has to come back down to 0. We can see that it just visited 0 November 4th, shot all the way up to 100 on November 11th, and then it's starting to cool back off. Where do we think it's going? Probably going back down to 0, right? There could be some stops in between, and the stops in between would be the top of this chart at 80, the middle at 50, and the bottom at 20. So these are the checkpoints that we could be stopping at along the way down to 0. Now, sometimes you might just get a complete blowout, and sometimes you may get a bounce, right? So again, like I said, it's about probability. But right now, if we look at all the other indicators, pretty much telling us that it's going down. And so this bending down is telling us that the momentum is to the downside, right? Because once we went to the upside, the momentum slowed. How do we know that the momentum slowed when we went to the upside? Well, one, we hit 100 on the stochastics, meaning that I mean, the spaceship is out of gas right now, right? And then when we look at the candles, we can tell that the spaceship is out of gas because we had strong candles 4 or 5 days in a row, and then boom, we hit the 600 price, and the movements start to shrink until we just fell off a cliff Friday, and now we start the downtrend, right? So your stochastics is just your additional confirmation on which way it's going. So again, these indicators are for probability. If all of them agree, it's highly probable that you're going to get it right about which way it's going. And for those that don't know, you can make money going either way in the market, up or down. Last Friday, we traded Meta, and I want to say that option is over 100% for the people that entered, and we played it going down. We knew that Meta was going to have a pullback. It's probably going to continue to pull back, but yeah, we entered, and again, right now we're sitting at over 100% off playing a pullback similar to this one. Any questions?
Ladarius, I do. Yeah, that Meta put was an excellent call. And I have a question. With the Mike Tyson fight with Jake Paul, Meta was one of the sponsors with Celsius and so forth. Would that make the stock go up a little after a big fight like that?
Javon, you can read my brain. That was the next thing I was going to go into. No, not right now. So once the numbers come out, because they sponsored it, we don't know which way that went and how much they put into it, how much they made from it, so on and so forth. I think the winner from that fight is Netflix. Like when I sat and looked at, let's look at Netflix really quick. When I sat and watched the fight, yeah, Netflix has been on a crazy run. This crazy run actually was in preparation of the fight. So Netflix is the winner of the fight because for one, you have people betting on this fight. And so anytime you have people betting on fights, they're going to watch the fight, right? They want to see if they made money or lost money. But I think instead of betting, I can't tell you what to do. This is not financial advice. But if it's me and I'm looking at something and I'm saying, okay, I can bet on Tyson or Jake Paul winning, I would just buy Netflix stock, because regardless of who wins, Netflix is going to win. Because if Netflix can pay Tyson, I don't know, 20 million, or the sponsors, or however they're not going to put on an event to where they lose money, right? Now, was it kind of glitchy and laggy? For sure. But this is definitely a breadwinner for Netflix, and I'm pretty sure that they had people subscribe just to watch the fight. So having events like this is going to help Netflix stock. And if you want to be a winner, you got to have a winning mentality, right? You can just play the middleman. Netflix, they also have, like Mark said, they also have WWE. So if you watch wrestling, they have WrestleMania coming. Is going to be broadcasted on Netflix. That's going to get more subscribers, which means more money for the company, which means more money for the shareholders. They also are going to be hosting the NFL games. Like Mark said, they're going to have Christmas games. So they're going to be getting that. I wouldn't be surprised if they hosted the NBA Finals. It just makes sense. Now, again, if you want to win, you can bet on the teams playing against each other. But you can just be a winner regardless if you just get the stock. Now, the other stocks, Meta, Celsius, as sponsors, are they going to win as much as Netflix on this? Probably not. But until the numbers come out, we have earnings or reports drop. We don't really know how much they made, but we know that Netflix had 60, 70 million people watch. And again, I promise, people are subscribing or renewing their subscriptions that left. They're coming back just to watch these major events.
They had 120 million.
Oh, 120 million, even better. So again, so y'all get what I'm saying. Netflix is the winner here. Regardless of who wins the fight, you're betting on either side. I would bet on Netflix, in my opinion. Ty, you had a question?
Well, I'm looking at the chart and it looks overbought. It looks like it's, do you know what I mean? And the other thing is Netflix is at an all-time high. So would you buy it now, or would you not wait for a pullback?
No, I'll wait for it to pull back. So in the market, before you have to get in, a lot of new people kind of make this mistake to where they get in, they buy the stock the day of the event. Once you know something is happening or about to happen, that's the best time to buy the stock. Since the event already happened, we're kind of too late if we're trying to buy right now, in my opinion. Now, once it cools down, that would be a good point to go in. But right now, like once it pulls back to what 775 to 800, that's what I would be looking at. I won't even consider it anything above 775 to 800. After that, because I honestly believe Netflix is probably a $1,400 stock if they do it the right way. But right now, yeah, just looking at the chart for what we just covered, I mean, the RSI is at 76. I would never buy stock at a 76 RSI on the daily. But yeah, good point, Ty. Mark, DraftKings may be another good investment. They were a sponsor as well. Yeah, I was going to touch on that as well. So in the same vein as Netflix, let's talk about other stocks and how, again, this is how you think. A lot of people ask me, how do I find these picks? How do I know that these stocks are going up? And how do I do this? The easiest way to do it is just play the middleman, right? So if you look at DraftKings, right? I haven't checked the stock out, but DraftKings was just running, right? It was just had a high RSI, right? Above 70. The stock was just running up, and Thursday, Friday, it started to cool off. So there's a thing again in the market. It's called buy the rumor and sell the news. So when you're buying the rumor, that means if DraftKings or Netflix, they're telling you that an event is coming, people are buying the stock in anticipation for the event. Once the event happens, they sell off and take profit. That happens all the time with Apple and iPhones. That happens all the time with other stocks that announce events or major things that could be great for the company. People are buying it up before, and once it comes out, it drops. People who are new to investing and trading, they think that it happens backwards. They think that nobody is going to buy before the event, and once the event happens, that's when everybody's going to buy. Nope, it happens the other way. They buy first, and then they sell once it actually happens, just in case it flops, because the rumor is bigger than the event anyway. And who wants to wait for an event and then be on the edge of their seat to see if it's going to flop or not, when you just can get the run up and sell off, and if it flops, cool, you already have profit. Another one that I've been looking at is Robinhood. Same thing. Robinhood has been running, right? So Robinhood had a situation to where you can bet on the election, right? You could have bet on the election, and of course, you could bet between the two candidates, Trump and Kamala. Again, me being me, I wouldn't have picked either one on the app. I would have just bought the stock, because guess what? If you have, I don't know, 100 million buys on either side, guess who wins no matter what? Robinhood. So people who are like, well, I want Trump to win or I want Kamala to win, and I'm watching the app and I'm putting money in, you could have just bought the stock. You could have just bought Robinhood stock and you would have won anyway. So again, when it comes to trading, it's more about probability. What's the probable chance of you winning? You have to take the safest thing that's going to make you the most money, right? And the safest thing is go with the company that's allowing you to bet, right? That's the easiest way to win, because they're going to get paid regardless. So I just want y'all to remember that moving forward. If y'all looking at stocks, okay, which stock do I buy? Am I going to bet on sports? Buy the company that's going to make money regardless. If it's Netflix with these events, buy Netflix. If it's Amazon Prime or Disney Plus and they're having major events, buy the stock instead of wasting money on betting. You could win money on one side or another of the bet, but again, probability is 50-50 at that point. The probability is close to 100% if you just buy the stock that's hosting the event. Ty?
Do you have a target price on DraftKings? And also, we're in like a pullback, right? So that's probably going to pull DraftKings down as well.
Yeah, that's a good question. What we'll do, Mark, you can Ty, put DraftKings in the chat, and then once we get to the that portion to where Mark is breaking down all the charts, he can break it down and chart it out for us. But yeah, I see exactly what you're saying. Yeah, the indicators are looking like it's pulling back. 57 with a downtrend, red candles, MACD crossover, stochastics. Yeah, the whole market looks like it's going to pull back, in my opinion. But yeah, Mark, out. Matter of fact, let me put it in the chat before I forget. DKNG. Boom. Okay. Good question, Todd. Any other questions? Again, I know I'm kind of ranting on, but I just want you all to play the psychological game better when it comes to picking stocks and when it comes to playing these major events, because it's going to keep happening. And then you're going to hear reports later on. Netflix made, I don't know, XYZ from this. DraftKings made XYZ. Robinhood made XYZ. When those are the real winners, not the people who are betting. Cool. Any other questions? And let me make sure I'm not missing anything on the spy really quick.
So, Ladarius, how would you then know that when the market began to fall? And I know we spoke about this a little bit, but if it's running up and we go ahead and put like swing plays in for maybe 60 days out, I'm always afraid that when it does that market pullback, that then I don't have enough time left on my contracts, and kind of got to cut for a loss. So how's the best way to protect that if the market's going to be bearish when we're trying to,
And so are you saying that you're actually playing it up and you're trying to protect yourself from the downside,
not the SPY, but let's say we bought Netflix, and and then the market has a total wide pullback. So we might be in an option for Netflix for 30 days out or whatever, and it loses value. That's what's happened to me on some occasions when it was making money, and then or I should say, it was bought the swing, and then when the market pulled back, it was just not enough time to recover.
Yeah, so it's two ways. One is a little bit more expensive than the other, but one is a stop loss. Like David said, you could set a stop loss at a certain percentage, 10, 20, 30%, whatever your risk tolerance allows. I think another way to do it, again, this may be a little bit more expensive, is that if you buy an option contract on Netflix, right, and you stretch it out for a month, what I would do is play a cheap put that expires in a week, or a cheap put that expires in 2 weeks. The reason why I would play that cheap put is because if Netflix has a blowout to the downside, that put is going to cash me out, and it could balance or offset the money that I would lose on the pullback from the initial call that stretched out even further, right? So you're having built-in insurance. Again, it costs a little bit, but you're protecting yourself to the downside. And then if it actually happens, that put is going to start to cash you out. And potentially you could take the money from the put and just put it right back into the call that's down and play it back to the upside. So you win either way. So that's one thing that I used to do when I would day trade, and I would run out of day trades on my long-term account. Before I had the threshold thing, I would just tuck a cheap put. Again, if let's say we're trading Netflix and the option contract is, I don't know, $1,000, right? I would go get a cheap put that's $100 and just set it to expire for a week, or set it to expire for 2 weeks. And if I lose the $100 on the put, if it's a total loss, that's fine, because that means that I protected my more expensive call to the upside. But if my more expensive call pulls back, it has more time to regenerate and to come back up. And also my cheap put could cash out. That $100 put could end up being a $300 put. It's so cheap, it expires, it has high volatility. And if you think that a drop is coming, you could protect yourself that way. Does that answer your question, Yvonne?
Yeah, that's a good idea. Thanks.
No problem. Cool. Any other questions? Great questions. Let me check the chat. I don't think we got anything in here. My new people, how are y'all doing? You can just write in the chat. You don't gotta unmute your mic. But if anyone has any questions, we're moving too fast. Any comments? Again, and if you're new, you can just write it in the chat to let us know, and we'll try to slow it down for you. But a lot of good things have been happening in the last 2 weeks, and it looks like this is going to be another good week for us, especially in the Discord, because we're playing the market to the downside. So money to be made there as well. All right, I don't see any questions, no hands. All right, Mark, you're up to cover their picks.
All right, appreciate it. 1 second, I share my screen. I guess we can start off with the DraftKings. Oh, it is. All right. Scared to exit all this. Okay. All right, so like what Darius mentioned, DraftKings on the daily, or Ty mentioned, DraftKings, all the indicators are showing us that it looks like it's cooling down, right? So we have a high RSI level, we have a high stochastic RSI level, and like Ladarius mentioned earlier with the MACD, we can see that from the histograms, it's starting to turn the light green colors, and we know anytime it starts to turn light green, it starts to try to trend and turn into the dark red, which is going to indicate a crossover that's going to happen on the MACD to the downside. So we do have a lot of bearish indicators. Now, if the stock was to continue to go down, let's see where it would potentially go to. Looking at the daily, so currently stock price is $39.84. And we see we have the moving averages. We can treat our moving averages as support or resistance. So since the price is above our 200-day moving average, we're going to treat this as the first line of support. So we're saying if this was to continue to dip down, we can see it potentially get back to $39.50, which isn't a huge decrease in the price value. Now, if it was to break beneath that, the next place is going to go is these cluster of moving averages that we have here, which is going to be the 100-day moving average and the 50-day moving average and the 20-day moving average. So we could be seeing the stock price try to get to around $38.30. And I'll draw that as support right now. So we're at about $38.30 will be where we could potentially see the stock price dip down to. And then from there, we'll be trying to look to see, okay, have we found the bottom? Is this the bottom? Is it going to turn around? And then we can do, we can further evaluate it. Now, if the price was to reject the 200-day moving average and just continue to trend upwards, I can see it trying to get back to this level here at about $42. And that's just because of the cluster of candlesticks we have here. And then also back here, we see that this was a line of support or resistance at one point. Stock price went up here, tested this area, rejected it. Even if we come back, we can see that the stock price tried to test this area multiple times. So this is a good level of support to have, resistance to have. So if the stock price was to go up, we could be seeing it try to get back to about $42. And that's on the daily. So that could happen this week. So if the market if it opens up red, which it probably will, again, looking at the indicators, it's showing me that this is trying to cool down. So if it was to pull back, we could be seeing it come and try to test about $38.30. And if it was to break beneath that level as well, it's just going to come and try to test about $36 or $35. It's going to be the next place it's going to try to come and test, which is going to be this 100-day moving average, which is at about $36.50. So that's going to be the next place it could potentially get to. And again, looking at the indicators, it does look like it's cooling down. Let's check out the weekly. Let's see. Yeah, so even on the weekly, the stochastic for me is a little bit high. RSI level is sitting at about 54. It's trying to point downwards, and that's because of the stochastic. I would be waiting. I would just be waiting for another pullback. Like, can this pullback that we had last week continue to happen? And if it does happen, I would just be looking to see if I can find where exactly the stock price is going to find the bottom at. So it's looking like the bottom is probably going to be about 36.50 for the bottom of this stock. And then at that point, that's where I'll be looking to try to see if I can find a good trade to get into, or find a good entry point to get into, to do a swing trade, long-term investment, or if you want to do some option plays, you can do some option plays as well. But that's what I see on DraftKings. A little pullback, especially this week. It definitely looks like it's trying to pull back. Now, again, with the fight news, we may see a spike. So just just wait till Monday to see what happens. Just wait till the market opens to see exactly what's happening on the daily. But if this trend continues, it's definitely pulling back and trying to come back and test these support levels. Any questions on DraftKings? So on the other one, let's take a look. All right. So looking at Robinhood, I would just looking at the daily, I would just be a little bit careful just because of where the RSI level is at, sitting at about 66. And then we have that stochastic RSI is just hit 100 about 3 days ago, or last week it hit 100 and it's starting to try to pull back. And we know anytime it tests 100, it's going to ultimately try to get back to zero. And we could be starting to see it try to get back to zero now. So I would just be careful. Now, if it was to continue if it was to increase, I can see it trying to get back to the top of these levels here at about $32. So about $1 and about $1 increase from this current price. Now, if it was to continue to trend downwards, I can see it coming and trying to test, you can say about this level at $30.50. And after that, if it breaks beneath that, it's going to come and try to test this 20-day moving average that we have here sitting at about $28.31. Now from this area, because we are in chronological order for the moving averages, we could be seeing a rejection, and we could see this stock continue to increase in value when it tests this 20-day moving average, just because we have 20, 50, 100, 200, and they are pointing upwards. We know when we see this type of pattern for the moving averages, that's indicating like when the stock price tests this 20-day, it's a strong rejection that normally happens, and we could see it just reject off of that 20-day and continue to increase. So what I would be looking for Robinhood is what happens when the stock price tests this 20-day. When it's getting close to this 20-day, I will be coming back, looking at the indicators to see if it's justifying me to get into this place. All right. So I will want to be looking to make sure my stochastic is in a nice place. My RSI level is in that sweet spot, 45 to 55 pointing upwards. And then if I haven't had a MACD crossover to the upside already, I will want to make sure that that's about to happen as well before I get into this trade. But just looking right now, it's looking like it probably needs to cool down off the daily. And let's check the weekly. Weekly, same thing. It's testing. RSI level is high. RSI level is high at 69, almost 70. Then we have that stochastic it does have a little bit more room to get to 100, but it's not a lot to have it skyrocket or make it to a point to where it's really beneficial to get into a play with this one. I would just be waiting for that cool down to happen. The cool down has to happen. It's not going to just continue to go up. It's going to pull back. And then with that pullback, again, currently we'll probably see it come and try to test 30, and then this $28.50 range looks the same way for the weekly as well. Any questions on Robinhood or DraftKings? Check. Perfect. Let's see. I know David had a few, and then I'll come back and I'll check out the other two outside. But so David had 80. All right. So let's take a look. Hey, applied materials. Okay, so currently price is $168.88. We see that RSI level is pointing downwards at about 42. We have the stochastic is sitting in that neutral zone. It was coming from a low, but we see it came and tested the 50 stochastic RSI level. It looks like it's rejecting that and it's trying to pull back down. So it could be trying to come back to the zero range. And we also have it testing a moving average. We have it testing the 100-day moving average, and that's going to be the first level of support we have. So I'll draw that as support here at about 163, 162.94 is going to be the first level of support. After that, if it was to break beneath this, I can see it's going to be coming and try to test this 200-day moving, 200-week moving average, which is going to be sitting at about 140, 142. You can call it about 142 would be the next level it'll come and try to test. I do see that we had a rejection on the MACD where we was really close to having a crossover to the upside. We rejected that and continue to go down. So if you're looking for the bottom of this stock, I will wait just a little bit longer to justify that this $161 range is the bottom, or its current value is the bottom. Just because we have a little bit more room on that stochastic to go down, we could be seeing this go down just a little bit more before it starts to turn around. So I would just be what I would be waiting for is that rejection. Can we have that rejection? And once I have that rejection, just reevaluate all of your indicators and make sure that they're pointing upwards. Make sure your RSI level is pointing upwards inside about 45.55. That stochastic isn't pointing down and trying to get back to the oversold region, or is not pointing up and is all the way up at the overbought region. So you just want to make sure it's pointing upwards within this blue range. Roughly, you want to have that same sweet spot for the RSI level for the stochastic. So that 45.55 pointing upwards is a good place to justify that it's going to continue to go up. And then you also want to make
65, right? Okay.
Yep. And then you also want to 45.55. And then you also want to make sure that I will wait until I see that I'm getting that crossover on the upside on the MACD as well. So once I see I had that crossover to the upside where my blue line is above my red line, that's another indicator that's going to let me know, okay, I could jump into this. And again, this is on the weekly, so that could take a while to form, but we'll check out the daily just to see if that can potentially happen on the daily this week, where we can find a good setup. Let's see. Okay, and then let me draw some resistance as well.
Down on the daily.
Yeah. So for resistance on the weekly, we can have our resistance at these two moving averages. That's going to be the first place for resistance. So at about 190, we'll call it 197. It's a nice place for resistance because that's going to be the 20-week and the 50-week moving average. So we know it's going to, when it's coming up, it's going to come and try to test those moving averages. So we may be seeing it come and test that area. And if it was to break above this 196, 197 range, I can see it getting, the next place it'll come and try to test is going to be right here at about 213. So that's the next level that it can potentially come and test if it was to break above that 197 range. And let's check the daily to see how it can potentially move. Yeah. So on the daily, it's looking like it has just a little bit more room to that downside to go. Crossover to the downside on the MACD, where the blue line is crossed underneath the red line, my selling pressure. Again, the stochastic RSI is really close to that zero, but we know it likes to come and test that zero range.
Yeah.
So there is still a little bit more room for it to come down and test it. And then we have that RSI level pointing downwards as well.
Downwards, yeah.
Yeah, and we can see that the stock price kind of rejected that 20-day moving average. It went up, broke above it, but then it started to trade red. So what I'm thinking is, I want to see what happens when the stock price gets on the daily for this week. I want to see what happens when it gets to this level at about 180. When it gets to about 181, 181, what's happening here? I'm sorry, I'm looking at this a little wrong. I see we got one candlestick that I missed. That's a green one all the way down here. So it already broke underneath this 180 range. It's at 168. So that same support line that we drew on the weekly that I can't even really put. All right, so I can get to it. So 160 is 162 range. What happens when it hits here? Can it reject this range? If it's rejecting this range, then we can potentially start to see an increase for the week. But it's going to first come and try to test this 162.
That one.
Okay. Yeah. It's going to come down and try to test this 9 times out of 10. And then from there, I want to see rejection. And from that rejection, I want to start to see my stochastic pointing upwards inside the blue. And I want to start to see I want to see the stock get closer and closer to a crossover on this MACD back to the upside before I even entertain
Think
getting
of
into the
getting.
trade. Yeah.
Oh shit. Okay.
Mhm.
All right.
All right.
Thank you.
Yep, no problem. And then so yeah, games. All right, GameStop. Me personally, I don't like GameStop a lot. Again, GameStop was my first ever option I bought, and I put in like $5,000 on options, and I lost all of it in like 10 minutes. So I really don't like GameStop, and it was with that short squeeze they had a while ago. But I know GameStop is one of those stocks that it fluctuates and jumps up and down relatively quickly. So let's take a
Was this
look.
a call or a put option? This is back in 2021.
Yeah. So I had a friend, to be nameless. Um, it wasn't Ladarius, luckily, but we had a friend that told
Was
us,
it Ladarius?
huh?
Was it Ladarius?
No, it wasn't Ladarius. Actually, there was a mutual
Not
friend.
me.
It wasn't
We
Ladarius.
all
It
know.
wasn't Ladarius.
Well,
It wasn't. It
don't,
wasn't.
don't,
But we
don't
was all on.
protect-
He was on the phone call with me when it was happening. But we had a friend. He was like, GameStop was went up. I can't remember how much GameStop was at, like one something, right, or maybe higher than that. I can't remember the exact price, but I remember it was up. And he was like, it's so high up. It's got to come down. It's got to come back down to these levels. And so I had like put options for it. Whatever price GameStop started to skyrocket at, I had puts for that level when it first started to skyrocket. And I had a put for like a week. And that put literally 10 minutes down, 10 minutes, I saw my money go from 5,000 to $0.
Ouch.
And it was a wrap. And it never came back.
That is bloody.
Yeah, I was hurt. I was really hurt. And I gave that actually, because that was my first introduction to options. And I kind of was like, yeah, I'm not doing that no more. And I didn't do it for a little bit. But then I got back onto options and I realized, okay, that was just, because I didn't have the knowledge. And options really are beneficial. You can definitely make money playing options. So luckily I got back in and started to trade options again. But yeah, I definitely am not a fan of GameStop. But looking at the chart, it looks like GameStop, just looking at, and this is on the daily, RSI level sitting at about 71, pointing downwards. Stochastic is pretty high as well. I'm thinking this needs to cool down. I'm really scared to choose support and resistance with GameStop, but it looks like if it was to pull back, it's going to come back down to about $23 and test that area. And I'm choosing 23 just because if I can zoom in the proper way, which there we go. If I zoom in, you can see that's going to be the 20-day moving average. So we know it's going to come and test that area first. And then after that, if it breaks beneath it, it's going to be testing the next level it can test. I'm going to keep them strong together. It's going to be about 23. So first place I'm looking to see what happens is if it's pulling back, can it get back down to, if it gets back down to 23, is it going to reject it? If it's not going to reject this price, it's going to pull back and it's going to come and try to test 22 to reject it. And if it does reject that 23, I can see it just coming. It's just going to try to come back to this current level of about 28, which is, you can see the major support we have, or excuse me, major resistance we had previously. And before that, we can draw it even tighter. If it rejects this 23.30 range, we can see it try to get to 24. And that's just because of all this activity here and then this activity here as well. And even right here, we see it rejected that area. So that could be the place where it tries to get to. But it does look like it needs to pull down. Just looking at all the indicators, the RSI is high, stochastic, and that MACD, while it has separation, we can see it starting to do that light green. So we know it could continue to go light green until it turns dark red. And that's on the daily. Just check out the weekly just to see. And on the weekly, a little bit more room on that stochastic to go up. It's testing that 200-week moving average, so I don't know if it's going to be able to break past that 200-day moving average. But again, with GameStop, I can't really tell you because you can see at this point it was testing that 200-day, and we had a pretty high stochastic RSI, and it just decided to break past it and blow it up. Even with a bad earnings report, it still skyrocketed. So it's one of those stocks that I'm just really scared of. Yeah. So that's all I really got for GameStop for you, David. I'm sorry.
No problem. No, you good. For some reason, all my picks this week just flopping. I need to be going the opposite direction.
Yeah.
I don't know why I always do the other side.
No.
Well, thank you. I appreciate it.
All right, no problem. So we have a few more. Yes, tuition definitely was paid. There. So you gonna go over Tesla this week? I know you go over Tesla a lot. I just want to make sure.
Nope. I was going to cover NVIDIA.
Okay.
They have earnings Wednesday.
All right. Tesla. Okay. Tesla. All right. So Tesla, you can see it's currently sitting at about 320, testing a support range that we had drawn previously. If it was to reject this support, it's just going to come back up and try to test about 360, which is where it's going to potentially come and test. And that's going to be like the top of this candlestick. And then back here, we can see it's a nice little area for resistance. So if it was to reject, we continue to trend up about 350, 360 is where you're going to see it try to get to. It looks like it has a little bit more room on the stochastic for it to go up. Stochastic is at 81, it's kind of high, but again, it can get to 100. RSI level is a little bit outside that sweet spot. It's at 64. But we did have a rejection on the MACD, and that's causing this MACD to have those dark green lines, and again, separation on that MACD. So we could be seeing this come up and try to test that 353 range. Now, if it was to reject our current support level, before it gets all the way back down to about 257, I can see it coming and trying to test about right here, sitting at about 280, 290 could be the next place we could be seeing Tesla get to if it was to reject and trend downwards. And this is on the weekly. Let's check out the daily and see how it's looking on for this week. So for this week, stochastic is pointing downwards. It's trying to cool off. We see it's testing at 50. So can we have a rejection on our stochastic RSI to point us back upwards? If not, we're going to start to see it continue to trend down to that zero range. RSI level is a little bit high, pointing up, sitting at about 63, just a little bit outside of that sweet spot. And then that MACD, the blue line, is starting to point downwards, and then that's when it's going to cause those light green candlesticks to form, or histogram bars to form. And with that, it's going to cause the stock price to decrease. So if it was to decrease from where it's currently at and break past this 314 range, beneath it, we'll be seeing this try to get back to about 289 this week. But we'll just have to wait for Monday to see what happens. Now, if it opens up red, I can see it coming and getting to about 289. If it was to open up green, I can see it coming back to our 254 range. And then from 254, I'm looking to see, can it reject this price? If it rejects this price, it's just going to come back down to 318. But that's what I'm seeing from the charts. Any questions? Perfect. Okay. All right. So Chipotle is testing it's been testing one of the support and resistance lines we had drawn. So currently it's testing support at about $58.56. We can see we have moving averages really close to this support line. So this support is going to be a very strong support for it to break beneath. So if it breaks beneath this support, and this is on the daily, we could be seeing this get to about 56, which is going to be the next level of support, which is going to be this 100-day moving average. I would even say if it breaks this level of support, we're probably going to see it get back to about 55. Just because if it breaks beneath this level of support that we have right here, again, because of these moving averages all together, that's a strong support line to have. So if it breaks beneath this, pair that with this MACD crossover we have to the downside, we could be seeing this decrease to about $55 this week. And then we have that stochastic RSI It's pointing downwards. And it's at 50, so we could be trying to see this get back to 0. And then we also have our regular RSI level pointing downwards inside of that sweet spot of 55 to 45. So we could be seeing this decrease as well. And we can see it looks like the bottom for the RSI level currently is sitting at about 42. So we could be seeing this RSI level try to get back to about 42. And then with that, that could be enough for this cool down to happen and for us to pull back down to this $55 range we have as support. Now, if it was to reject these moving averages, the first place it's going to come and test is about $60. So about a $2 increase from its current support level. And then if it was to break above that, we'll probably be seeing it get back to our resistance we had drawn here at about 63. And then this is on the daily. Looking at the daily, is from where the indicators are setting up, is looking like it's about to pull back down to this $55 range potential. That's what I'm seeing on the daily. And that can be confirmed Monday once the stock market opens. We can see if it's trading red, we'll probably be seeing it get back to 50 to 55. Let's check out the weekly. So weekly, the weekly is pretty high as well. Stochastic at least is pretty high. It's just coming back. It's coming off of 100, pointing downwards. So it could stay above 100. We can see it has a few months where it's still above 100. But because it's at 100, I would be just a little bit careful trading it, and I would be trying to pay close attention to it. RSI level is inside that sweet spot of 45.55, but it is flattening out. It's sitting like flat basically. So this could be starting to pull back as well. So I would just be a little bit careful trying to find a position at this point. This may not be the best point to find a position at. I would just be waiting for a rejection. It looks like on the weekly chart, we can say that about 56 may be the place where it rejects the moving averages. So I mean 55, 56 is going to be probably because that's the 20-day and the 20-week and 50-week moving averages are right there. So just be a little bit careful. I'll be waiting to see rejection before I actually get into play here. I will be looking for that rejection, and then also my indicators pointing bullish as well. Any questions on Chipotle? Okay, all right, so I'm gonna go a couple more. Okay, so all right, so I'm looking at current prices at about 140, 138. We have support drawn at 137.60. Then the next level, if it was to break beneath that, is going to be at about 123 or 125. 124, 125 is going to be the next level of support if it was to break this 136 support line we have drawn here. Now, if it was to reject this level, it could get back to this all-time high levels of 171. But I'm thinking before it gets there, it's probably going to come and test the previous close, which is sitting at about 150. So we could be seeing this at about 150, 151 this week. If it was to reject our support line we have drawn. Looking at the indicators, it's looking like if you're looking to buy this for the long term, I will wait. Or if you're wondering, all right, when should I get out of this trade? I've been trading a while. I'm up on profit. I would start to think about shaving profits now, just because of where the RSI level is at about 70, and it's pointing downwards. And then also that stochastic RSI is coming from the overbought region, pointing down. It's trying to get back to oversold. It's trying to get back to that 0 range. And then you pair that with you're really close to a MACD crossover to the downside. This may be a good time to go ahead and shave profits. Or if you're looking to get into a trade, I would just say just wait a little bit. Just wait for these indicators, especially if you're looking to trade it for the long term, because this is the weekly. I would say just wait until you see these indicators start to turn around and point up bullish, because right now they're showing me a lot of bear indicators. And then with that, if it's pulling back, again, if it breaks beneath this 136 range, 135 range, it's going to come and try to test 123. And then at that point, that'll probably be at that point, the 20-week moving average would probably be closer to our support line. So with that, that'll be a really strong support line to break. So if it's rejected from there, I would check the indicators to see if I can find a good trade. If not, and it breaks beneath it, then we'll be seeing it get potentially back to 105. And that's on the weekly. So again, that could take weeks or months for it to happen. But for this week in particular, if we check out the daily chart, stochastic RSI is pointing downwards. So it has room to get back to that oversold, hit that zero range. The price is testing the 20-day moving average. But looking at this MACD, where it had the MACD crossover to the downside, we could be seeing this try to get back to that 124 range. So I would definitely be waiting for it. If I'm looking for an entry point, I'm looking to see what happens at 124 this week. At 124, if it gets to 124, can it reject this price? If it rejects this price, we'll probably start to see it increase. But if not, we could be seeing it get even lower. And just be a little bit careful, because I do see that we have the moving averages in chronological order, 20, 50, 100, 200, which is a bullish indicator. So we could also just see our sales reject this current 20-day moving average and try to point back upwards. But I would just be really careful trading. I will wait. Yeah, I would definitely wait, just because I got a lot of bearish indicators, and at the same time, I got a few bullish. So it's like 50-50 for me. So I wouldn't necessarily even try to get into a trade here. I would just be waiting for it to establish that this is the bottom. And once it is, then you can go ahead and get into a trade. Any questions? Maybe short and any put ideas. From this point, yeah, I would just, it's like 50-50, because it can go down, but I'll just be a little bit careful here, because you don't want to get caught in a short squeeze, and then it shoots up on you. But I would just be, and I'm pretty sure this stock probably wouldn't have a short squeeze, but I would just looking at this daily, you can probably, it's just really tough because of these moving averages. I will wait to see if the price can break beneath these moving averages, these two moving averages, and trend downwards. I will feel more comfortable getting into a short play. But if not, and it's rejecting it, I will wait a little bit, because if it rejects this 20-day moving average, again, we can see it potentially get back to 168. First it'll test 150, but then eventually it could get back to 168. So I would just wait a little bit and confirm that this is going down. Now on the weekly, it does look like it's going down. It does look like it's going down, but it's more so a matter of when it's going to go down. So to get the best entry point, I will be looking this week to see if I can establish that this is like the peak. Once I find the peak and it's rejecting the peak, then you can do it. And you can trade on the weekly. You know, you set yourself out far enough so that it can do what it needs to do on that weekly chart. Yep, no problem. I know you have one more up there. Sorry, my mouse or my keyboard types something weird. The dog just laid on me. All right. So let's start off with the weekly. Okay. So this stock is an all-time highs. Remember, $5, $10 increments. I like to use it as, we can see this probably was an earnings report, which it looks like is lining up with earnings that caused this huge spike in the price. At this point, it's trading really hot, right? We got a 82 RSI level, stochastic RSI level is high. MACD does have a lot of separation, which is nice, but I would just be a little bit careful trying to get into a play with this one, right? Because of how high that RSI, stochastic RSI level is. At this point, if we was to see it start to trend down, I don't want to say it's going to come all the way back down to 400, 500, right? So as it's pulling back, this is probably a good time where you'll have to, and then the VRVP isn't going to give us enough data. It's going to say that the next place is 400. But at this point, if it's pulling back, I'm thinking the same way as how we say, okay, when it hits all-time high levels, use $5, $10 increments for your target prices, for your stop losses, or the next places of support and resistance. You could probably use $10 as those next places is going to come and test. It's going to slowly try to find its way back down to 450 if it's going to come back down. That RSI and that stochastic is really high, so I would just be a little bit careful. I wouldn't even necessarily be looking to get into a play at this point. And if I've made profit, I'll be looking to shave those profits and maybe just keep your initial investment in. But I would definitely be looking to shave profits at this point because of where that RSI level is at and where that stochastic RSI level is at. We know it needs to come down, both of them. Let's check out the daily just to see. Yeah, so looking at the daily, RSI level is really high. Stochastic RSI level is really high as well, excuse me. This could be a bullish flag that's being formed, or it could also be a potential double top, which we know is bearish. So one is bullish, one is bearish. Again, I would just be really careful of how I'm trading this, just because of where that RSI and that stochastic. I don't know if it has enough room. It doesn't have enough. I don't think, just looking at this stock right now, it doesn't have enough room to complete a bullish flag. Because we know with a bullish flag, it takes the length of the flagpole, and that's almost an $100 increase. I don't know if it has enough steam to get back to 100. Get back to an additional $100. That's going to be about $700 we'll be seeing this at. I don't think it has enough room for that. So I would be really careful playing this, and I would just be waiting for it to find its bottom. I would reevaluate this play once that RSI level has cooled down, once my stochastic RSI level has cooled down, and then once that MACD starts to point back up. As while it's up right now, again, it's starting to flatten out for that buying pressure. Is going to want to come down as well. So just be a little bit careful trying to trade this one. I would have this one on my watch list. I wouldn't even be trying to play it this week. That's what I see. But for this week, again, level it needs to break is going to be here at about 150, 590. It's going to be about the level it needs to break below. If it breaks below that, we could start to see it, those $10 increments back now. If it's reject this level, I can see it coming back and trying to test the top of this, which is sitting at about, if I zoom out, can't even zoom out on this phone. Make it bigger. There we go. Which is at about $625 is where it could potentially make it back to and test that level of resistance this week. Any questions? Short ideas. Yeah, so if you're going to short it, again, once it breaks support at 590, my next level that I'll say it'll get to is probably about 580. But then if I'm shorting it, I won't have my strike price at like 580. I'll make my strike price 585, just so that I can confirm. Because while it can get to 580, I know it has a higher chance of getting to 585. And then when it gets to 585, you don't necessarily have to get out right then and there. You can just keep watching it with the ultimate goal of 580 being the place where you want to get out. But having it at 585 would just it'll just give you it'll make me feel more comfortable and more confident staying in the trade, knowing that I hit this level, it's still going down. So I have some type of profit if it was to start to pull up. Any questions? Perfect. All right, so I'm gonna pass it back off to Ladarius. I see we're at about 7:32 p.m. So I probably won't be able to get to pattern of the week, but we'll see once Ladarius is done with his stocks. Thank you.
All right, cool. I appreciate that, Mark. Yeah, pattern of the week. Yeah, about 1, 2, 3, 4, 5, 6, 7. I got 8 stocks. Don't know if we're gonna get to the pattern of the week, but
not getting there.
Yeah, I'll do my best. All right. All righty, let's see what we're looking at. All right. First thing is Meta. So if you're in the Discord, we've been talking about the S&P and Meta. I called the S&P moving down, Monday, Tuesday? Also called Meta and AMD moving down right after that. I want to say a day after that. We can see that Friday Meta pulled back $23. So again, we did I think we charted that one live in the Discord, and we hopped in. And so we're in the play up 100%, and it could get even sweeter for us, but it could get worse for people who are holding Meta shares. So what we're looking at is a triple top, which is kind of a rare pattern, but it happens. A triple top is a just elongated double top. And if you don't know what neither one of these means, anytime you have a double top, that is a bearish pattern. Bearish meaning that the stock is going to pull back. Anytime you have a triple top, that's almost a guarantee that it's going to pull back. And you can see, Ty, you got a question?
Technically, there are 4 tops.
Oh, yeah, yeah.
Does that signify anything when there's 4?
No, nope. Triple top is the furthest that it goes. So, I mean, if you have a quadruple top, I mean, even more. Triple top is, again, more confirmation that it's going to go down. I don't know if they have any tops after that. It's just triple, double, and triple. As far as I know, I mean, who knows? Could be more, but that's a good eye, Ty. But yeah, you just need 3 touches at the top. And here is an example of a triple top. And you can see here, like Ty, you said it touched more than, this is about a few more than 4 times actually. This is a triple, let me move this dentist thing out the way. This is a triple top. So this is why it's good to know your patterns, because you can make easy money just from the, oh, Mark said a quad top is a thing. So yeah, I didn't know that. But yeah, so the triple top that we're looking at is same formation. What you want to do is, there's 2 ways to play this. You can play this side of it going into the bottom, or you can play the breakout to the downside. So right now, for the sake of time, you can see we have a triple top, and this is what we were playing. We were playing this side of the trade. Another thing is that this is why I really like the VRVP. If you don't know what the VRVP is, in short, it is the visible range volume profile. Easy thing is just telling you where the volume is at. What does that mean? It's telling you where all of the buyers and sellers are, right? So this blue and yellow, these blue and yellow bars are telling you where the buyers and sellers are basically sitting. This is where the volume is at. The dangerous part about this triple top, or a good part about this triple top for us that are in the Discord and we're in puts, is that we got LVNs right here. A LVN is a low volume node, which means that if the stock is dropping past, there's a high chance that it can accelerate and just drop down to the next level. So you see, we have all this activity here that kept the stock bouncing around. And on Friday, I called in the Discord. I said, hey, if we can't hold above 555, if we close below 555, there's a high chance that we're going to fill this node gap, right? And so we closed at 554.08. So it looks like Meta could be coming back down to about 530, 540. Mark said it signifies the same thing. Okay, cool. Yeah, quad top, triple top, double top, all are saying that the stock is going down. If it touches the top too many times, it is coming down. So this is what we're playing right now. We're in some puts, may add some more, but yeah, this is what I see for Meta filling this gap. Also, to back my thesis is that if we look at the MACD, we can see that we had the buying pressure almost taking over the selling pressure, and then it just gave up. So the fact that it gave up, the selling pressure remained dominant, it means that we're going to continue the downtrend that we've been in. And if we look at the RSI is only at 43 and it's pointing down, so it still has a ways to go. If we look at the stochastic, it is at 22, it's not at 0, and it still has a ways to go to 0 for a reset. And then this is where multi-time frame analysis could help. We look at the 4 hour, the 4 hour happens before the 1 day. Look at the 4 hour. We can see 33 on the RSI, and guess what? You can see that node gap right here again. LVNs, low volume nodes. We could be accelerating through this gap. And then again, MACD crossover to the downside. Buying pressure is underneath the selling pressure, and stochastics is still not at 0. It's about 8, and it's to the downside. So everything is looking to the downside on the 4 hour and the 1 day. If we look at the 1 week, this is the best part for me as a person that's in a put. We got that right there. So again, if the blue line is on top of the red line, we're in a buy trend, right? But if that red line takes over, we're now in the sell trend. So the MACD, this is, again, for my more seasoned traders, this is multi-time frame analysis, right? This is how you do it. So it's like a domino effect. You see, in one, we'll focus on one indicator. You got the MACD, it crossed over already on the 4 hour, which should domino effect and set it up to happen on the 1 day. You look at the 1 day, you look at the MACD, and it is back down to the downside as well. So we got 2 out of 3 to the downside. And then when you cross over to that weekly, boom, it is on its way to the downside as well. So multi-time frame analysis is a skill that I wouldn't focus too much on starting out, but the more you trade, if you're going to be trade heavy, that's a skill you definitely need to have in your bag because it can definitely help you with continuations through different time frames. So we're trading this on the weekly, and the only thing we need is a drop to what, 550. You see this at 550, it may be a goner. We could see 530, 540 this week, and then it's a march back to the upside. So if you need this triple top article, if you want to do some more studying to add this to your bag of patterns, I know we're not going to get to cover one today. There you go. But yeah, Meta's pulling back. I got the whole market pulling back. If you just want to know, SPY, the Qs, Meta, Nvidia, Apple, you name it, I got them all pulling back. But yeah, next stock. Hey, well, any questions? I know I went through that a little fast, but got a lot to get to. Cool. Just my watch list is all in the red. Yeah, yep. People are taking profit, so it may be in the red all this week too. But we buy red and sell green, so red is not necessarily a bad thing. Red is just opportunities, unless you're playing puts. Then you can wash your machine it, make money to the downside, make money to the upside, make money back to the downside. All right, Nvidia. This is the talk of the town. So Nvidia has earnings on Wednesday. Nvidia is propping up the market. So if Nvidia goes, the rest of the market is going to go. And if we look at Nvidia, let me use my normal candles instead of my Heikinashis. Ooh, too fast. All right. If we look at Nvidia, it's already making a double top, right? And a double top ends where it started for my pattern people. So it looks like it started around here. I mean, if you want to, you can say the waypoint is 130. We can say it started on this red candle. Went up to 148. It came down on 2 red candles, made that M shape in the middle, and then came down again. So this is a double top. So we just looked at a triple top. Let me show you the double top. Blah, 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 blah. Here you go. This is the double top. So 2, it makes an M shape. Go up, touch one price point, come down, go up, touch the same price point. You want to play that downside on that right slope down that mountain. You look here, we went up, touched it on green, rejected, came back up on green and rejected again. So it looks like we have some more action to the downside, just pattern wise. Also, RSI is at 53 to the downside. We look at the MACD, we're already in the confirmed sell trend. You can also see that we were in a weak buy trend, right? It crossed over to the upside, but it was very, very faint and weak. Crossed back over to the downside, and now we're getting some strength to the downside. So the next thing I would want to watch is the stochastics. We're at 51 on the stochastics. Again, it doesn't have to go all the way back up to 100. That's why I talk about the different levels. You got 100, 80, 50, 20, 0. You can see it came from 0, hit 80, and then started to come back down. It does not have to go to 100 every time. Again, it frequents 100 if you scrunch the chart up, but it does not have to go every time. It can get as high as 80 and turn around. So we have a lot of downward pressure. We have selling pressure, stochastics down, double top forming, and RSI pointing down on the daily. If we look at the weekly, which I haven't looked at, we look at the weekly, we have stochastics again curving down. It's just sitting right on top of 80. So if it goes back up, I mean, we're at what, 80? We got 20 points up to 80, but then we got 80 points all the way down to 0. There's more money to be made to the downside versus the upside, in my opinion. And then if we look at the RSI, it is at 62. It's kind of waning back and forth. If you look at the MACD hasn't crossed over to the downside just yet, but if you check the histogram, we got some light green happening there. So with that light green, that means that we could see more light green. If we start to see more light green than dark green on the weekly, this could be curving to the downside as well. Let me check the 4 hour. Yep, 4 hours, same thing as the 1 day. Downside, you can even see the double top a little bit better here, that M-shaped pattern. Boom, down, up, down. It looks like we got some space in here to move down. So this is what I'm watching for NVIDIA. Do I have any questions on NVIDIA? Cool. Apple. Let me reset my chart. All righty. This is a tricky one. So when you look at Apple, Apple looks like it's going up, right? So you look at Apple, it's made a strong uptrend. It's been consolidating a lot. And then when you look at the MACD, you got a moving average crossover to the upside. And you see that light pink on the histogram. Let me get it there. Light pink on the histogram. That means that we could be moving to the upside. Only bad part about this is that when I check this, again, multi-time frame analysis, when I check the other time frames, I'm not getting the same sentiment. So if I go back, we're just looking at the 1 day. If I go back to the 4 hour and we look at the RSI is already starting to go down at 45. We can also see that we're kind of making our own double top here, right? So we can start at 220, 221, went up, came down, went up, rejected, came down. The only thing that's saving it right now is that 224 line, and you got that 223 line. So if Apple breaks down, it's going to take its time to get all the way down to what, 220 to 221. And then we got major resistance in between 220 and 215, but that can also happen as well. Reason being is because the MACD, the trend is starting to curve. We could get a MACD crossover to where the sell side is dominant, and then Apple is going to go for a swing as well. Also, you get a better picture of a double top happening on the stochastics, and the stochastics is at 62, and it looks like it's on its way down. If it breaks the M, this little M part at 57 on the stochastics, then we're probably coming all the way back down to 0 to 20 range for a retest. So Apple looks good on the 1 day. This is why you can't just rely on one time frame. You look at it on the 1 day and you're like, oh, this is great. I'm gonna trade it to the upside. Check the 4 hour is going down, and you have to realize the 4 hour happens before the 1 hour. So again, we're talking probabilities. I don't know if we're going to get that MACD crossover, because if the 4 hour is dominant and we go down, the selling pressure is going to increase, and this is not going to switch. We're not going to get that crossover. Now, unless Apple comes out with some great news or something to help boost the stock, then it can push this MACD crossover to the upside. But right now, I'm not seeing anything that can do that for now for Apple. And if we check the weekly, it is already to the downside, right? RSI is going down. We got 3 red candles, which represents 3 red weeks. Then you can see the MACD is already crossed over to the downside. And you can see that the stochastics is already sitting at 20. So again, this is why multi-time frame analysis is important. You look at the 1 day, you think it's going up, but then you go back to the 4 hour and it says it's going down. You go forward to the 1 week and it says it's going down. So you got 3 time frames, 2 saying it's going down, 1 saying it's going up. Again, if we're trading probabilities, it's probably going down, right? 2 of them are saying down, 1 is saying up. I wouldn't go with the up versus the down. Again, anything can happen because we're not talking guarantees, we're talking probabilities. But that's how I would enter my trade, and that's how I would deal with Apple. Do I have any questions on Apple? Perfect. AMD, the next one. I think this one actually has this one has a volume, a low node too. So AMD, I've been calling the downtrend since what, about 147, 145 to 147. I've been calling this downtrend. It actually hit where I thought it would, but then underneath that is kind of dangerous because we also have some LVNs, a low volume node. You can see right here between, but right under 134, 133, there's a gap that could be filled on the volume down to about 126. If it falls down to 126, that would be a nice buy point, in my opinion, because we have heavy support at that price point. So those in the Discord, you know, what I've been talking about as far as AMD. But for those that haven't seen it, AMD looks like it can fill and go down potentially. Honestly, if it gets too bad, like we have another day like we had Friday this week, we could see AMD at about 120, especially if NVIDIA blows earnings. Again, AMD, NVIDIA, same sector. If NVIDIA hurts, the whole sector hurts, and AMD won't be exempt. So this is where we're going to be watching. And then if we look at the weekly, let me reset this. Weekly, we're in a downtrend. Also, that 20 is now underneath that 50. So the 50 is on top of the 20, which is not good. RSI pointing down, and we just got a MACD crossover. MACD crossover to the downside. Selling pressure is now dominant, which means that we could be going on a trip again down to the 120s. And then we can see that on the weekly, we got a 32 on the stochastics, and we could be on our way down to 20 and then to 0. So again, like I said, if you ask me, I got the whole market pulling back unless NVIDIA saves the day. NVIDIA is going to be Superman this week. And before NVIDIA's earnings, I still have the market pulling back. But that's to be seen. All right, what time are we at? Oh, I'm making good time. We got 10 minutes. Cool. 10 minutes and what? 4 stocks. All right, let's keep it moving. Coinbase. I've been saying, if you've been in these sessions, I've been saying since Coinbase was at 149 that Coinbase is $1,000 stock. I've been saying that, and I'm still saying that. I've been saying that for a while. Coinbase is now 305, and it is making a bull flag. If you don't know what a bull flag is when the stock, let me widen this up some. When the stock goes up, let me see, how can I actually show it? Yeah. So a bull flag is when the stock accelerates to the top, makes this flagpole, and then it pulls back, and then it accelerates the same length as that initial flagpole, but out to the upside. So you can see this better here, that we had a strong trend up, pull back on 2 candles, and then we're back up with this green candle. So if we get another green candle, that will be confirmation. And what I'll be looking at is a break around the top. So 324, 325. If we break that, then that means that we could go higher. And if I shrink this, matter of fact, let me show you a better picture of what it looks like. We shrink this up. For my pattern people, this is an inverted head and shoulders. Shoulder 1, the head, shoulder 2, which means that once it breaks 375, we could fly up to 450, 500. So it is on its way. It's making gains, and I bought a little bit Friday just to add in, but I hope it pulls back. I got 260 for a good buy-in on a pullback. Don't really know if that's going to happen with all the good news around crypto for right now. But if it breaks 325, then I may reconsider a different buy point. But that's what I'm going to be watching for Coinbase this week. It is doing great. All righty. PLTR. PLTR has been going crazy. It is at $65. I remember when it was at $10 for a while, but $65 is great for the stock. I would not touch this. This is at an 81 RSI. It goes against my trading principles. I know it's hot. I know everyone is talking about it, but once it comes back down to around $50, $55, I think that'll be a better buy point. And will it come down? Sure. Everything that goes up comes down, right? So this is a crazy buy trend. But even with that crazy buy trend, guess what we're getting? We're getting a little light green, right? So that means that we could be pulling back. We could be cooling. And at some point, again, this is going to pull back. if for my people that want to play puts, I would look at in the money puts with a long date. I know they may be expensive, but that's the best way to protect yourself with something that's running this hard, because sometimes stocks that run this hard, you think that it's just going to come down as fast as it went up, and that's not going to happen. If it has this type of strength up, people are still buying in. Like you have, retail traders that are still buying it. Like, oh, I just want to, just put my bid in. And then when it comes down, that's when they start to sell off, which increases the pace that it comes down, but it also helps it stay up longer. So I would just wait for a pullback. I think it's going to be a great stock, especially under Trump, because I was talking to ChatGPT about the different sectors that could be impacted by Trump's policies. And basically, aerospace and defense, which PLTR, they get a lot of their contracts through the government for AI and data analysis. So I think PLTR next year could be one of the winners when it comes to contracts and governmental based things. But I do think the other side of tech could see some damage from Trump and his tariffs, because if they're putting 60% tariffs on goods from China and then high percentage tariffs on goods from other countries, trying to make what he would say make America great again, then it's going to be taxing to other countries, which means that tech could take a hit. But then on the flip side, you have oil, gas, energy, those stocks going back up. You got banks going back up, like JP Morgan and Chase, Goldman Sachs. You also have defense stocks like Raytheon, or they're now RTX. You also have Northrop going back up. So stocks, just for those that want to play the market next year, it's, again, buy the rumor, sell the news, pay attention to those stocks. The next one that I'm looking at, I just wanted to mention PLTR because I know it's a hot one, but I'm definitely waiting for it to come back down to earth. If it keeps going up to 70, 75, I don't mind, because again, I'm a probable trader. I like probability in my favor. RSI 81, I would never trade that, and I don't plan on it. All right, Oxy. This is one of my favorite oil stocks. Buffett owns, I think, about 30% of the company. He has rights to own up to 50% of the company. And I think it was a really smart move, because once Trump is inaugurated, on the 20th, then that's when he's going to start his policies. And I'm pretty sure he's going to want oil to be our thing again as Americans. And the last time that he was in office, that was kind of his thing, to where, you saw Exxon, Chevron, Shell, BP, Oxy, those stocks are moving back up. And I think that could be the same thing. I think that we can also see Oxy, along with all the other names, reach back up to those highs, because Oxy at one point was all the way up here at about 75. I think in the past it was even higher. Its highest to date, where is it at? Oh no, its highest to date is around the 70s. I thought it had reached up to 100 before at some point, but this is all the way back to what, 20? Oh, it did. Okay, I'm just not zooming out far enough. All right, I'm not gonna zoom all the way. This is on the daily, so it's crunching up all the days, but you get what I'm saying. Hold on. There we go. Has a lot of room to go up. It's actually making like a double bottom. It came down, went up in the middle, came down again. And if it breaks above 52 to 53, the next stop would be 56. If it takes out that 56, we got about 58 and then 60. I think after 60, we should have some momentum to take us back up to 66 and then test that 70. We break 70, we could be going back up to the 75 to test all-time high. So this is a play for 2025. If you're looking for something for next year, Oxy could be one of those. Again, pay attention to defense, gas, and you can also pay attention to PLTR. It's a blend of both. But yeah, I'm trying to get prepped for this Trump presidency for the next 4 years. And it looks like these companies are probably going to be the winners based on my research. All right, last stock. What time are we at? 2 minutes. All right, I've made good time. Last stock, BABA. Chinese stocks are going to see some love. So here's an article. This is about the best Chinese stocks. actually like what they were saying in the article. Again, for the sake of time, I don't have time to break down everything, but this is the point that I want to highlight. Okay. All right. It's not helping me. But the point that I want to highlight here is that Chinese stocks could see a boost because Trump's, again, when he enacted his tariffs, is going to put China up against the wall. And then China is going to have to inject stimulus into their economy to stave off the tariffs. Right. When Trump was in office last time, he had tariffs that went against China. But this time, China is in a different position. And I think that that China is now going to start to help their own companies because they can't really depend on us as much as they used to with the new tariffs. So the companies that you can pay attention to is Baba, JD, Baidu, a few of the other names. You got some EV stocks too, but my favorite right now is Baba, followed by Baidu. I like both of those. And I mean, again, there's a whole bunch of them that you could pay attention to, but Baba is the one that I would pay attention to the most. They just reported earnings. They did pretty well for a beat up Chinese economy. They beat earnings. They missed revenue slightly by 1%. But the number that I'm paying attention to is they made 34 or 33, almost $34 billion in one quarter, right? So they're making 100 to $120 billion a year, which is massive for a stock that's only $88. And again, only thing that has to happen if China starts to inject that stimulus, then we could see a pump happening to Chinese stocks because, again, China's going to be on their own. They're not going to have our help anymore. And a good buy point for Baba, in my opinion, is 80 to 85. It's been pulling back. We have this crossover on the day. And what I would do, if you're going to watch it for a long term, I would watch it on the weekly. And we can see on the weekly, if I zoom in, we're touching the top of that moving average. But again, like I said, we could come down to 85. If we break 85, I'm looking at about 80. You can see that this is what, top of 79. And then we could be moving back up to 120. So this is one I'm paying attention to. Also, pending MACD crossover to the downside. So if you're looking at Baba, I wouldn't just jump in immediately, but I would wait for a nice pullback. I would go with shares. I know some people like options, but for me, I would go with shares. It gives me more flexibility in a time of uncertainty. And then if I'm wrong, it's not a cataclysmic loss, right? If you're wrong with options, it could be a cataclysmic loss depending on how you set it up. But I think that Chinese stocks, oil stocks, and defense stocks, along with the financial stocks, of course, could see some love next year with Trump and his policies. Any questions about any of this? I know we covered a lot today. I appreciate you all for sticking with us, especially the new people. I know it's probably a lot going on. It's a lot to see, but we'll talk with you all more at the end. Any questions about any of these charts that we looked at? Any comments, concerns, questions?
Well, Darius, when you're talking about banking, some of the banks already kind of had a run, but some still are yet to run. Would you be looking at the ones that ran already or the ones that have yet to run?
It depends on the type of bank too. So like Goldman Sachs, JP Morgan, and Chase would be the ones I would look at. Bank of America, I'm still kind of on the edge of my seat about that one. So for Wells Fargo as well, I know those ran, but I would be a little careful with those banks. But we'll see. Again, I'm leaning more towards JP Morgan and Chase and Goldman Sachs for right now. Still doing research on the banks. Haven't really made my number one pick yet for the banks, but again, I like JP Morgan and Chase and Goldman Sachs for right now. Could change, but that's what I'm looking at right now for banks. Yvonne.
Thanks.
No problem. Great question. Any other questions? We're right on time. Cool. Let me stop sharing my screen. Stop the recording. Where are we at? So that can upload to YouTube.